welcome everyone to the very first live episode of Coffee Break with Logically. My name is Dounya. I am one of the marketing associates here at Logically. Before we dive in, I want to give everyone just a quick introduction to what Coffee Break is and what it's all about. So each month we will sit down with industry leaders and experts to discuss a wide range of topics regarding the overall ETF industry, the future of technology, the markets, and so much more. So our goal with each episode is to provide you, the audience, with valuable insights and to create a space for meaningful and thought-provoking conversations. So generally, the discussion, including today's, will be around 20 or so minutes, and then towards the very end, we will have a question and answer session. So make sure you guys stick around. So yeah, get comfortable, grab your cup of coffee. I already have mine, or tea, or if you're drinking something that's else outside of coffee or tea, that's none of my business. But let's get started. So today's special guest is none other than Emil Tarazi, the CEO and co-founder of Logically. Emil, you come with an impressive background, an extensive resume that includes 14 plus years in the financial industry. You started out on the UBS program trading desk, designing and running high frequency strategies while managing portfolio risk. You then made your way over to HSBC, trading ETFs and index swaps. And one of your last stops before Logically was Cantor Fitzgerald, where you worked closely with ETF issuers to list and trade their products. So with that incredible background, I would love to know more about what inspires you regarding the ETF industry, and how did it lead you to identify the need for a more transparent solution like Logically? So essentially, I want to know, where did the idea of Logically come from and your love for ETFs?
Yeah, well, thanks, Dounya. And before we begin, thanks to Dounya and the team for kicking off Coffee Break and all the hard work and preparation to get to today. I'm really excited to share my story and also a little more about Logically and where we're heading. The one thing is, I don't have coffee after 3 o'clock. It's like my strict cutoff. So it might be more like a tea break for me.
Nice.
Maybe next time I'll bring some tea or something. So yeah, you mentioned a little bit of my history and trajectory throughout my career. When I graduated from college and started in the industry, that was 2006, and ETFs were $700 billion in assets at that point. Mm-hmm. And maybe slightly over 1,000 products. Today we're at something like $5 or $6 trillion and over 3,000 products over that time frame. And I think when I was sort of a junior guy on the trading desk, my boss at the time kind of sat down and asked everybody to come up with ideas for like ETFs that we thought would be good in the marketplace. We wrote down some ideas, but they were all, when you look at where we are today, those ideas were kind of vanilla, plain ideas. The point being, the innovation in the space over the last decade and a half or 2 decades has just been incredible. So really what inspires me the most about this ETF industry is just the breakneck speed at which things are moving, the innovation that the ETF wrapper gives investors, and really just revolutionizing, making low-cost vehicles for people to invest their money. So that's really been quite exciting to have a front row seat to all of that. When we started Logically, 5 years ago or so now, we saw that growth that we just talked about. We saw the innovation. We saw that ETF issuers were having, distribution challenges in communicating what their products do, and more importantly, showing how those products fit in a portfolio. So some of the first things that we did to help issuers was build tools that they could embed on their websites and allow their clients, advisors, to come onto their sites and get access to, world-class portfolio analytics, side-by-side comparison tools, deep dive tools on liquidity. Really, a lot of the same things that we used when we were traders, the same data, the same concepts. We took all of that know-how and simplified it into these tools that we put and made more accessible to a wider audience. And that's really how things started. From there, we expanded our client base. We initially, were just talking to ETF issuers who we had good relationships with from the very start, but we wanted to expand this out to a much broader audience. And that's why we built Logically, the platform, and why our addressable market in that case is, the many hundreds of thousands of advisors in the US and also in Canada. So yeah, we are a international platform in that sense. And the innovation continues. So we can certainly touch on that on the rest of the call.
Yeah, thank you. I really appreciate you walking us through the inspiration behind Logically and how it grew from just focusing on ETF issuers to just the global industry and just advisors overall as well, including them into the picture as well. So you mentioned that Logically has been around for 5 or so years now. So it has experienced its first pandemic then. And so taking it back to COVID, what were some of the key takeaways that you have from that period? Like if you can dive further into how your business model for Logically adapted to the changing market during that time, and what strategies do you believe, proved most successful during that time?
Yeah, we certainly experienced our first pandemic. I guess we were not alone, and I hope it's the last. But the world changed. I think we were as a company, Logically, we were kind of lucky. We're a financial technology company. We were a small team just starting up. We actually got bigger throughout COVID in the early days. So, I think we kind of just fell into lockstep. It was certainly, the markets, I think, were probably the most challenging thing. In those early days, the market tanked before U.S. government stimulus came in. And around that time, we had already done a lot of work around, giving people the tools that could help them navigate their portfolios through that trying time. We highlighted the tax loss harvesting opportunities that advisors could take. We had a lot of webinars and marketing showcasing how our products could help identify opportunities, potential tax harvesting opportunities, but more importantly, figuring out, of the 3,000 ETFs in the US, for example, which are the ones that you can replace, one exposure with another. And we have, obviously quite a lot of analytics and data to support that type of analysis and research. So, I think the business model didn't really change so much as we had to just, adapt to the new world and adapt to the markets, prioritize things that our clients were most concerned about and seeing how we could help them in those areas.
That's incredible just to see how Logically's resiliency was able to also provide itself as a solution during such uncertain times, because I know that was probably a very difficult time for other businesses and for maybe some parts of the fintech industry, but to see Logically position itself as a solution, I think that's incredible, which makes me want to talk about now just the future for Logically, more so in relation to ETF trends. with both the global economy and analyst projections just changing over the years and resulting in the strong possibility of just a different set of investment themes, especially for the new year, I'm interested to know, in your opinion, and I think everybody else is as well, from your perspective, what you anticipate to be the top ETF trends and themes of 2023 from your perspective and Logically's perspective.
Yeah, it's a great question. So I think a lot about, one of the businesses that we're in, which is supporting ETF issuers, specifically with what's called ETF rule, the SEC ETF rule 6C11. I won't bore people with the details, but basically it's legislation that was enacted or came into effect, I believe, in 2019, and allowed, really opened up the floodgates for ETF issuers to more easily create ETFs. So really, like, the innovation we've seen in the last 2-3 years has been because of that, positive changes in legislation that really make it simpler to wrap strategies in the ETF wrapper, to do self-indexing, to run actively managed strategies. And I think we've seen all of those trends pick up. So, just, I think, let's call it, architecturally or operationally in the markets, I think we'll see more ETFs with more innovative, products that are wrapped, that ETFs are wrapped around. So we'll see more active strategies. We'll see more mutual funds convert into the ETF wrapper. That trend started, a year or two ago. It's going to be a tsunami of AUM flowing out of mutual funds and into ETFs. So we'll see, what we'll see there is potentially funds that have extremely long track records, earlier than the earliest ETFs, become ETFs. And that will change sort of, how we make decisions on what we want to invest in. Mutual funds also tend to have, whole suite of active strategies. And those active strategies need to trade a lot. And that's where ETFs come in again, right? When you have this tax advantage wrapper where you can basically create and redeem out of the fund, and do your trades as a portfolio manager, essentially tax-free, that has already a huge advantage over the traditional mutual fund structure. So we'll see that be another trend. I think we've seen, in the thematic space, ESG's sort of taken a hit a little bit. I think a lot of people have questioned, what ESG means. The SEC was getting involved in, digging more into greenwashing. I think, ESG was obviously very big in Europe, did not pick up as much in the US. In some sense, ESG is being replaced by what I think of as more broad, sort of broader category, which is the thematic investing. So ESG is quite maybe nebulous definition, whereas thematic investing, you can have sort of very narrow themes, and you have ETFs that now express those narrow themes, like lithium mining and battery technology and stuff like that. So we'll see more of that. I think one more thing is probably kind of the all-in-one ETF, right? That we don't have target date ETFs today, and obviously that's been the mainstay of the mutual fund space. So I think we'll see more of that in the future. So basically, kind of a one-stop shop for for all investing needs. So those are some of the trends. I think, generally 2023, the markets are going to be choppy.
Mhm.
There's still a lot of uncertainty around interest rates and where inflation is. Um, and, we're looking at the jobs markets, and we see layoffs in big tech companies. Microsoft announced, 10,000, 5% workforce reduction yesterday. We're going to see this play out over some more time. I think 23 may be hard and choppy, and advisors more than ever will need to look at their technology stack and look at the tools that they have and see and ask if those tools are helping them navigate into this next year.
What are the opportunities within the future of the ETF landscape that you just mentioned that you see logically being able to help make a meaningful impact? In other words, or in addition, how does logically differentiate itself from other companies in the same space? How is logically positioning itself to stay ahead of these trends that you just discussed and potentially competition?
Yeah, so I think one of the most exciting products that we've built and that we continue to build through sort of extensive roadmap is the portfolio coach. The coach is a unique application that really brings together data, monitoring, portfolio analysis. So that's kind of where we see our edge is in technology and leveraging our understanding of the markets. There's kind of Moore's law of the CPU world, right? Where every 12 months, CPUs double in the number of transistors. We've all benefited from the incredible pace of technology, changing how fast we compute, and we've got these AI generative models now. The technology moves extremely fast.
Yes.
The point being, we haven't seen technology really impact the financial advice and what we do in the wealth management space. We think that with the tools that we're building, we want to be able to offer personalization at scale and do it for a lower cost than what the industry is used to today. And those are some of the ideas behind the portfolio coach.
So with mentioning the portfolio coach, and you mentioned earlier about just Reg BI from ETF issuer standpoint, how would portfolio coach position itself as a solution when it comes to compliance issues for ETF issuers and advisors as well?
Yeah, great question. I mean, where the coach is many things, but essentially, the workflow that we're talking about is you can have your accounts flow through logically. You can, at the household level, set, your investment policy, set your objectives on what you want to achieve with those accounts or that household in terms of, asset class exposures, in terms of distribution yield, in terms of, risk targets, in terms of ESG, and also tax harvesting. There are lots of different sort of features that you can set. And then from there, you let, the system do the hard work of identifying those opportunities, identifying when your accounts are sort of out of bounds, and then how to get back in line so that you're not getting alerts or you're not, deviating from your IPS. So that's really where, I guess from a compliance perspective, Reg BI perspective, or CFR, in Canada, where something like the coach can really be a digital assistant for your portfolio.
Basically the future of AI almost. I mean, that's half of discussion these days is AI. So that's incredible to know that it has all these capabilities. So that's awesome. I honestly appreciate you taking the time to sit down and have this conversation today. Like I said earlier, it's not every day I get to sit here and interview my CEO. And for everyone else who joined us, I really appreciate, just you joining us. And I hope really this discussion provided you with a behind the scenes look into Logically, and you're able to walk away with great insights regarding the ETF industry, the future top trends, and what's to come from Logically specifically. Before I open up the question and answer session, are there any other final thoughts, Emil, that you would like to leave us with?
Actually, just one more thing. You mentioned sort of the trends in the industry. I think I would be remiss if I did not mention direct indexing. We've seen that grow quite a bit. But at our company, we're very we love ETFs, right? So we want to make sure that ETFs stay as a key building block in people's portfolios. Direct indexing is great, a great concept, but today it's very limited to U.S. equities. So you miss out on the diversification benefits if you're not thinking of all the different exposures that ETFs can give you. So that's another sort of main feature of the portfolio coach, is what we call hybrid indexing. So the ability to implement models that incorporate ETFs of all sorts, as well as single stock exposures. So we the coach gives you those compliance features, but also opens up sort of this new innovative technology. So that's another big trend that I think we're going to have a lot of discussions about in 2023, and people should keep their eyes and ears open about it.
It's incredible. It's awesome. Okay, so thank you for that. I'm just going to open up the question and answer just to see what we have. Okay, here's a question. So you mentioned the legacy mutual funds and target date funds converting to ETFs in the future. How fast do you see that happening? Also, there's a part 2. Does Logically track target date information?
Yeah. How fast? I think it's going to speed up. I think there were the initial initial moves from mutual funds to ETFs were like big legal tasks, like trying to figure out how to structure one wrapper for another. Now that we've had maybe a few dozen now behind us, I think there'll be more confidence in traditional mutual fund managers like picking it up. I wouldn't be able to give you any numbers. I think it's going to be bigger this year, and it's going to continue to grow. I think mutual funds are still, in terms of trillions of dollars, are still much more, many more assets than ETFs. But I think that those numbers could start to tip in favor of ETFs in the next 2 to 3 years.
That was a great question, and thank you for that response. Okay, this is another good one. Do you think that the fight for spot crypto ETFs will continue, or do you feel like it is a losing battle for the industry and investors looking to own them in their portfolios? So I guess your own opinion on crypto ETFs, spot crypto ETFs.
It's a good question. I mean, the crypto fervor has certainly died down. I've always been a big believer in crypto. I think the challenge is, we've seen spot crypto in other countries in Europe and Canada. So they're there. I think the US SEC has always been a little more cautious, just because there are futures based products. It's very, we've seen firsthand what happens on exchanges with FTX, and I think that's the big challenge. Is these things are loosely or lightly regulated. There's maybe questions or concerns about who actually regulates these things. I think, the FTX scandal only serves to delay further the crypto ETF, the spot crypto ETFs. But I don't think it's over. I think on one hand, a lot of the fervor has always been price based. I think we may need to think about it, slightly differently, maybe more as gold, as we think about gold, or we'll see. There's tons of innovation in the space. What I'm really excited about beyond crypto ETFs is kind of the innovation with payments and like truly decentralized payments. I don't know if we'll ever get there, but I can imagine there's a lot of people thinking about the same thing.
So we can file that under to be determined, but that's great. Another question is, can you discuss any partnerships that Logically has formed in the ETF space, and what should we expect from these collaborations? Also, can I add another question to that is, can you discuss any exciting projects or initiatives that Logically is working on? I think those two kind of go hand in hand.
Yeah, sure. I mean, in the partnership front, I have to mention that our capital backers and also client, the Toronto Stock Exchange, with their help, we've expanded out further into the Canadian marketplace in a way that we could not if we had just been US based. So their support and their ability to reach out in that marketplace has been fantastic for us, and I think we'll continue to do that. The mentioned earlier, there's spot based crypto funds in Canada. Don't forget also that the first ETF ever was listed in Canada. So there's a long history of the ETF market expanding and growing, and we've seen more and more products. We're at over 2,000 products in the Canadian marketplace. So I think we'll see more innovation there. In terms of like exciting projects or initiatives, we have we actually sat down recently and just kind of put together our 2023 product roadmap, which has lots of features in it. I won't share all of them, but I can tell you that obviously beyond the things you'd expect, like enhancing our user experience, we're looking to add intraday data to our system this year. We've been mainly, kind of a T-1 portfolio-based system. And I think with the introduction of intraday data, we'll have, a completely new facet of our system where users will be able to spend more time and explore more parts of the market.
A lot of exciting stuff coming from Logically, and we're just starting out the year, so this is incredible to know. And I really appreciate you sitting down with me, Emil, and just giving us the behind the scenes of Logically and what's to come and what to expect. So thank you once again, and thank you everyone for joining us. Again, we hope to continue this a guest each month, and we'll definitely let you guys in the know about who our next guest is. But thank you so much, Emil, for opening up Coffee Break with us. So this was incredible. Thank you.
Thanks, Dunya. This was fun.